Good morning. You're watching The Market right here on ET Now with me, Aisha Faridi. I've got Nikunj Dalmia, Aman Dabash as well joining in on the show. And what a surprise pickup in the market eventually yesterday. What looked like it's going to be one of those days where we're going to fall prey to the weak global cues. And then we saw some resurrection coming in thanks to metals, thanks to SBI, thanks to energy names, and of course some of the selective private banks as well participated. So net, we clearly ignored the US inflation print, exactly the point that we were making same time yesterday.
So Aisha, look, what matters, at least in the near term, is the domestic activity. And we've historically seen that the dynamics of the US inflation are very different than what the Indian macro setup is. So I'm glad markets did the obvious, which is that they started gap down because of a pushback from global cues. Then came that bout of short covering, which was also followed by domestic buying. Yesterday's buy figures were yesterday's institutional numbers were decent. Nifty recovered 300 points from the day's low. Bank Nifty recovered about 1,000 points. And there was definitely a bout of short covering, which was there both in Nifty and the Bank Nifty. So what are markets telling you? That global cues are important, but they are not crucial. What are markets telling you? That yes, if there is a bit of a macro shakeout in the global market, markets would consider them, but that does not become the real benchmark. So this is A, maturity of the market. This is B, also a telltale sign that how there is a big divergence which is happening. We will certainly react to global cues, but the global cues then they really have to be very very shaky, or they have to be very scary. Small anecdotal data which every time Indian markets would take cue from, I think that is getting diluted and that is getting ignored. I'm not saying that Indian markets will march on their own tune. No, that's not going to happen. But small pushbacks in the market, I guess they are all turning out to be buying chances rather than a time when you need to run and scare. And I think yesterday's market is also impressive simply because it's come at a time when you had a little bit of shakeout, a little bit of skim from the top in PSU stock. So I think for me, yesterday's market is nothing else but a mark of stability and a pure endorsement of the fact that what matters, I think, is the local environment, not so much so the global connect.
And I guess the institutional activity as well was proof to that. FIIs continued to be sellers. It was DIIs which were the buyers.
Yeah, and that number I think is just getting more and more magnified now.
Yeah.
I mean, I thought 2023 it was all about compulsions in terms of weightage changes and what was happening in global emerging market allocation. But the fact that the month of Feb we've not seen any large flows, the fact that in the month of Feb Nifty is not broken down. We are actually sitting closer to 21,000 rather than 20,000, and despite very little support coming from domestic global investors, that is a clear indication that how strong the local retail stroke the DI flow is. So for me, I'm not saying anything new and obvious, but for me, I'm simply putting the facts here that small ripples in the global market is unlikely to have an impact when it comes to Indian market setup.
Okay, speaking of the little bits of nuances that the market as well is observing, and it's interesting to really look at what's happening within the entire banking sphere. Of course, traditionally, one used to always lean on a heavyweight like an HDFC Bank, which has a weightage of 26.4%, as you can see, among the banks. But given the spate of underperformance, the question is, with SBI's fundamentals looking fairly strong, can an SBI do, Nikunj, what an HDFC Bank did?
See, the weightage is different.
Yeah.
So obviously, that's 26%, this is 10%. Yeah. So in terms of the impact what SBI would have versus what HDFC Bank would have, the impact I think would be much less. But I guess SBI has done something special in the last couple of days, and that is what I would like to point out. Post numbers, there were a lot of naysayers who said, okay, there is a general challenge in the environment, liquidity is crunched and NIMs are likely to be under pressure. SBI has really surprised everyone and delighted everyone. I think two factors are at play here. One, post HDFC Bank numbers, HDFC Bank, which in a sense had become the most concentrated contra bet, that in a sense has gone on the back burner because markets did not like what HDFC Bank had indicated. But markets are aware of the fact that the Indian banking sector, I think, is in a good shape. And within that, I think the switch is on. So if you compare HDFC Bank versus SBI, I'm purely looking at price action here. The price action, I think, is just giving an indication that how money is moving out of HDFC Bank and how money is moving into State Bank of India. B, I guess State Bank of India is still very cheap. Valuations are not very expensive. They are at the turn where size is becoming their advantage. The liability franchise is still intact. And while SBI may not be doing the kind of heavy lifting what HDFC Bank can do purely because of the weightage, but SBI coming back, that in a sense becomes the real pivot for a lot of PSU banks which otherwise have been in a good group. I'm going to say the same line which I said 2 years ago. Who says elephants cannot dance? Well, this one is an elephant, and this one has decided to do a tango.
Absolutely, and what a price action coming in on SBI yesterday. But that said, Vedanta, that's the one which is in focus this morning, and what we're picking up from our sources is that it could be in talks with GQG for a potential stake sale. Ajay, who broke this story just last evening, joins in with more details. Ajay?
Well, that's correct. A lot of positive developments seem to be coming Vedanta's way. In fact, yesterday when we were in the show, the stock shot up almost 4% in the last hour of trade. The other one was the Tuticorin plant, the court commentary coming in. But this one could also be of interest for shareholders, because we understand that GQG and Vedanta have been in conversation for almost 6 to 8 weeks regarding a potential deal. But now we understand that this deal is nearing. It could happen in the form of block deals from the holding company of Vedanta in favor of GQG. Rajiv Jain, the maverick investor, we've seen some of the bets in the last few months, and we understand that almost $1 billion worth of block deals could happen. What this could do for Vedanta? Vedanta is sitting on almost $3.5 billion of debt at the parent level, which they are trying to reprice it. They have also taken some new debt, or trying to reshuffle it with global investors, repricing it. Now we understand that this deal could actually help clean them up 1/3 of at least of their debt, so which was a bit of an issue at the parent level. What this could actually do is that it will give a message out to the market that the promoters are very keen to resolve the debt issues at the parent level, and about 30-35% of the debt could be moved out. We understand that this could happen very, very soon, in a matter of days, if not today. And we tried to reach out to the management for a commentary of these conversations regarding stake sale to GQG. We did not get any response. In fact, what they said, that we don't respond to any market speculation. We understand from our sources that it could happen very shortly.
Promoters likely to sell stake to GQG. That's Vedanta's stance. Thanks very much, Ajay, for filling us in with those details. All right, let's get a move on. And clearly, it was a hotter than expected inflation print. You had the S&P 500 capturing the 5,000 mark yet again. But let's find out what exactly the global commentary is centered around. We've got Vinny here to take us through that. Vinny?
Good morning, and absolutely the commentary does come around inflation a lot more now this time around as well. European Central Bank Nigel has actually highlighted the inflation picture. Yes, it's surely improving as of now, but it's still a long way before it's reaching a good level, a satisfied level that anyone could agree to as well, and suggesting that actually interest rates are something that aren't imminent. Moving on, we have BOE's Bailey, who is highlighting as well that the quantitative tightening would be a tax on the banks. That's something that normally works out for a program in terms of saves taxpayers' money, and that would be effectively be a tax on the banking system. That's the word coming in from BOE's Bailey. Lastly, we have commentary that is coming from Federal Reserve Bank Chicago President Goldsby, who's saying that a slightly higher inflation data is something that is possible in the next few months as well, and that would be still consistent with the path to achieve back the central bank's inflation target of 2%. That's not going anywhere, but maybe a slight bit of a higher inflation is something that could be there for the next few months as well.
All right, thanks very much for giving us those details. And by the way, across Asia as well, you've got the Japanese economy as well, which has seen a decline in their overall GDP. But let's move on then and track levels with our chartist Naresh Mirani joining in. Morning, Naresh. Let's get a take from you, because there was certainly quite a bit of fervor in the markets. The broader markets as well proved their mettle. What is it that you make of the pecking order, the fact that you had a lot of those PSUs at the forefront, BPCL, SBI, ONGC, etc., are rallying hard and fast?
So overall, a good recovery and across the board. And more importantly, banks also made a recovery. So we've gone through that phase for the last few sessions where we could not cross the last 3-4 days highs. Yesterday, we finally saw the Bank Nifty crossing highs, and that too without the support from the largest weight, which is HDFC Bank. And HDFC Bank also has made an intraday recovery yesterday from the lows after making new 52-week lows. So overall, the structure is positive. We wait for follow-on. And overall, now the recent lows of yesterday become a stop loss and you want to buy on dips. So Bank Nifty as well as Nifty become a buy on dips going forward. And overall, broader market also went through a nice 3-4 day correction and we've seen a recovery. On the PSU side, one has to be looking at exiting the railway names, etc. on rise and continue to focus on oil and gas continues to be in momentum and still looks interesting as such. And other names could be interesting in the PSU pack, something like a Concor, which has not gone up, but would be a little careful in the railway names out of defense.
Kunal Bothra as well with us. And Kunal, a pretty splendid recovery in the Nifty Bank Index. How are you reading into that?
Well, absolutely, yes. In fact, the last 4 days, 4 or 5 days of the heightened volatility for the indices, what we've done is we've managed to protect the 200-day moving average for the Bank Nifty on closing basis. And I think that's a very strong indication that there's a lot of demand for the index and for the entire banking sector as such, closer to this 200-day moving average, which I think is at 44,500, 600 levels for the Bank Nifty on the spot basis. Now, after yesterday's move, what we've also done is we've managed to make a fresh 4-day, 5-day swing high for the Bank Nifty and breaking past about 45,500 mark and closing about those levels. So I would believe that this could be a very strong indication that maybe this 1,000-point band of volatility which you were trading, I think that should now get replicated into a trending breakout for the banking index. So we wait out for 44,500 as a support or as a stop loss for this long trade, and we would look out for at least 1,000 to 1,500 points on the upside from yesterday's closing, which should take the Bank Nifty to almost 46,500 500 plus mark.
Okay, let's talk about individual stocks as well. And Naresh, I see metals and banks.
Yeah, so those are the two spots which look interesting from a perspective of risk reward. So the first is the buy on Jindal Steel, which has been relatively from the time the metal pack topped out in 2021. Jindal Steel has been a relative outperformer. And now the stock is knocking at that resistance of 750, which it tried to cross last time. Did a dip and now we are back above those 750 mark. So out here we could see follow up towards 800, 820 in the short term, stop loss at 740. Second is a buy on ICICI Bank, wherein the stock over the last few times, every time the stock made a low in the last 3-4 days of correction, did not sustain below the 980,000 mark. On the upside, 1,050 remains a resistance. Once if it crosses, that would imply ICICI Bank will also take leadership, something similar to what happened with SBI. So preempting that with a very small stop loss at 1,000 and initial target price of 1,100.
All right, those are some of the top recommendations being flagged off by Naresh. Kunal, what's looking good on the charts according to you?
So I'll go with large cap names, but two sectors, specifically IT as well as banking names. So from the IT pack, Wipro is something which I'm very bullish on, and I would expect the stock to get into a big breakout mode. So the breakout which started off from the daily time frame is now moved on to the weekly, monthly charts for Wipro. So this should be a trending move for the stock over the very near term. 570 as a target for the stock, and stop loss could now be tailed to 480. HDFC Bank remains to be a stock which has been under severe selling pressure, but now the indicators are extremely oversold. So looking at a very strong bounce for HDFC Bank or a mean reversion towards its 200 moving average. Buy with a target of 1450, stop loss at 1348.
Okay, there you have it. Those are some of the top recommendations. HDFC Bank featuring on Kunal's radar. Stocks to keep an eye out on the back of news, and Anisha joins in as always to walk us through that. And Anisha, let's discuss Yatra's quarterly numbers. Looks like everyone's really traveling lots.
Clearly, except us, everybody else was clearly traveling because it was a seasonally strong quarter and the company has managed to deliver a very strong show as well. Reported a profitability versus a loss last year, and even in terms of the revenue, there was a jump of almost 17% quarter on quarter, 23% year on year, and gross bookings too have seen a solid surge. Not just that, the visibility is also getting stronger because the company has managed to add 26 corporates in its kitty this quarter gone by, with a potential of annual billing of almost 223 crores. So the corporate side of things is also looking up. Margins expanded, and that's the reason, as I said, the company reported a profit versus a loss last year. Going forward as well, management believes that this entire trend that we are seeing of travel is going to be very sustainable. In the long run, they are expecting margins to improve. In the very near and immediate term, they are investing a lot in growth. They're adding to the sales team to make sure that they increase their market share, etc. But in the long term, there will be a margin expansion for sure. For hotels business, they're expecting the margin expansion to happen over the next 1 to 2 quarters itself. itself, and other expenses are also expected to normalize going forward. On the debt side of things as well, they managed to reduce the debt quite meaningfully. In fact, 51% reduction in debt on a quarter-on-quarter basis, and that means your interest expenditure will also come down meaningfully going forward. And lastly, as far as corporate business is concerned, that is where the management is a bit circumspect, because we're seeing that IT slowdown is having an impact on travel as well, at least corporate travel is that. So they're expecting a bit of a muted sense there, but other than that, clearly, Nikunj, I think anything related to travel, tourism from all walks of life is clearly getting a thumbs up.
Nisha, I look at it very differently. I look at Yatra and I say, okay, is the sector growing? Yes. But is the competition also growing? Yes. Now, this is a business where you actually have multiple players. You got a lot of competition, and it's a business where the stock prices actually have seen a run up. So to make a case that this kind of compounding will continue in the so-called travel portal business, I doubt it very much. See, I also get a sense that more and more direct bookings are now something which is getting, which now is clearly evident, whether it is on the websites of the hotel or websites of the airline, because the same credit card schemes are kicking in. So the advantage of going to some of these websites where they give you optionality, they give you credit card deals, and that I think is an advantage which is getting blunt, and the competition I think is very intense, because everybody now wants to walk on the path of profitability. So that for me I think would be the tricky part now, that on this entire commitment, once you become listed, the path to fall to profitability in a space where you were doing mass selling largely because of discounting and getting traffic and revenue going, how will the dynamics change? So the sector will grow, but will every company go, and who's got the right to win? I'm not very clear, at least in my head, on that.
Okay, PB Fintech, Anisha, why is that in focus after the Bima Sugam draft rules?
Yeah, so IRDAI actually came out with the draft regulations of Bima Sugam. Now, this is something Anurag has been highlighting for us ahead of the curve itself. And we know that PB Fintech is one stock which continues to be in focus. However, the street is a bit divided. There are parts of street which believe that this is going to be as big a disruptor as UPI, which will completely change the way insurance is sold in the country, while others believe that this is going to be one additional gateway perhaps, but it's not going to change the basics of the business model. Let me run you through a few commentaries that are coming in from brokerages. Macquarie believes that this could act as a key disruptor for all online web aggregators, including PB Fintech. The scale of impact on insurance premium market share and take rates is something that they're watching out for closely, but it does have the effect to impact the prospects of PB Fintech in the long run. That's the view coming in from Macquarie. Investec believes that this is going to be a UPI moment for the insurance sector, as I said. They say that, however, having said that, they don't see any major change in the way insurance is sold, because Bima Sugam may make insurance sales process at the back end simple, but the customer facing part of the business is likely to remain the same. So it could be a challenger to a few of these companies, but it's not going to be a complete threat to the business model, is what they say. And that's why PB Fintech remains a preferred pick in the insurance sector. Morgan Stanley believes that there is no mention of discounted pricing vis-a-vis other channels. So it's not that this platform is going to be any more lucrative for the customers to go. To add to that, it does not imply that regulator has mandated availability of all the products. So there are certain products that some of the companies can even have only on their portfolio or can be sold only through different channels. So there is no compulsion that all the products will be listed here. So they are a bit worried whether it will be as exhaustive as people make it to be. Of course, the key to be watched will be the margins and the kind of distribution and take rates, etc. But this is something definitely to watch out for, Nikunj. We don't know exactly how it will play out, but given the kind of disruptions that we are seeing in the new age tech with Paytm and the regulator acting there, people might be just a bit more skeptic.
See, everybody knew this was coming, so there's nothing new. I mean, a year ago we knew this was coming, so there is nothing new in terms of what is come. I mean, I would like to remind our viewers that everybody got worried because of ONDC, right? I mean, look at the reality that while ONDC was something which was supposed to create an alternative for food delivery and other delivery module, it has not really been such a very grand success. So within insurance, I think what really matters is that while you can have a lot of back end, but you also need to have a lot of interface where you're taking care of clients. What really differentiates a good platform and a good distributor is the fact that are you able to offer the same service both online and offline, because insurance is all about, it is a push product, but it requires a lot of servicing. So while a website is going to give you options, it's going to be disruptive in terms of price. Insurance is a very strong repeat business, Anisha, because in insurance, at least the health insurance pass is something which needs to be renewed annually. Life insurance is something where, God forbid, if there's a problem, it really needs to be serviced. Can this website really live up to that kind of servicing? Time will tell us. So I think this is something which you need to keep at the back of your mind, that what will happen to commission structures. But it's really the onus of would be that are they able to create a parallel, let's say what other companies have created, in order to really make that distribution network work, which I think time will tell us.
All right. Thanks very much, Anisha, for giving us those insights. Well, I think I was the only one flagging this off yesterday, that yesterday was Valentine's Day. And clearly, we did see the bonanza play out. We've got some tweets and interesting ones at that coming in from Albinder Dinsa of Blinkage, talking about how their various categories have done very well. They've sold the highest ever roses and bouquets delivered in a day, highest ever chocolates delivered in a day, and the orders per minute as well have been very robust when it comes to the number of teddy bears as well that have been sold. So which one did you guys get your spouses?
I kept it simple. Flowers tell you all the stories.
Yeah. Okay, so that's some interesting data to chew upon. We'll be right back after this very short break.
Right here on ET Now, let's just take stock of what the global handover has been. Last night, of course, or rather day before, of course, it was the weakest. But while our markets started off falling prey to the global handover, and then from there saw a nice recovery led by metals, led by specific banking names. They all sprung up in action. 21,840 is where we finally shut shop at the high point of the day. Of course, needless to say, while we were closing in for the day yesterday, you had the US futures actually rebound quite smartly. And that's exactly what the handover has been overnight as well. There's been a very strong rebound across US equity markets, Asia as well, lapping up that same sentiment. And the Nifty implied open as well, indicating pretty much the same thing. Sanjeev Bhasin joins in on the show. Let's talk about how the trading day ahead is going to look like. Sanjeev, hi, good morning. We were chatting about NALCO. What an impressive performance, and what a impressive performance from the stock as well yesterday. 10% move.
13%, Aisha, 13%.
At the high point, yes.
And I gave you a Valentine gift early in the morning. Don't go by the other TV channel and macro and micro. If you are an economist, you'll never make money. I don't want to give gyan, I want to make money. So all your viewers made 13% there, 6% on SBI. Maruti is 11,000. Just reminder of where we stand. And pessimism at all-time highs, telling us that new highs may be there today, tomorrow, or by Monday. Because the left-out feeling is humongous. PSUs are under-owned and results are far better than expected. So who thought that 13% you'll get moves in NALCO, in BPCL? So I am very, very confident that the broader market now and Bank Nifty, for me, HDFC Bank has bottomed out for lifetime. It will never go to these levels again. So I am looking at a steady and sure, this is the time to be buying your banks.
Okay, let's keep the Valentine cheer going then. Tell us all about the other stocks you love. Anything from the mid and small cap universe?
By the way, Aisha, just on a lighter note, I reached Calcutta in the night and I went to someone's house for dinner. It was Valentine all over on Park Street. It reminiscence of old times, but you cannot believe how Calcutta is the city of joy because everyone enjoys. Rather than us who are cramped up in our daily lives, Bombay, Delhi, not. It was really pleasurable to see the people moving about and enjoying the Valentine. And yes, I was the star of the party, given that was bullish in the morning. So Aisha, look, there are certain stocks which I am very, very bullish. If I just did a channel check yesterday, a couple of days with UPL and the management, they are now looking to divest some of their assets to reduce debt. And they said the destocking is over. I think agrochemical and pesticide prices are rising higher. Secondly, the Argentine one-time loss of FX is going to come back, and they are relatively confident on double-digit growth coming very, very strongly. Their EBITDA margins were the lowest in last 16 quarters. They are talking of a rebound, and they are very, very sure that couple of their divestments will play very, very good results. If you recall, yesterday they have they've invested in a Tanzania crop protection company, which means that they are now spread all over the globe. So that becomes a value pick. My other pick is definitely going to be continuation of NMDC and SBI. I think they are here to stay. And M&M, I think the numbers were far better than expected. On the mid caps, I am very, very bullish on India Bull Real Estate. As I gave you the thesis of it, you cannot have the largest real estate player or one of the largest, which has excellent land banks, trade at 7,000 market cap. The embassy takeover will be a huge upside for this stock, and I think this can be re-rated for a doubler in the next 1 year. Dhanlaxmi Bank is another stock which has come to very, very attractive levels, closer to 40, 42. Do your shopping over there.
Okay, there you have it. Lots of recommendations as always from Sanjeev Bhasin. We'll be getting lots more, so stay with us, Sanjeev. But want to address NMDC's numbers because it's been pretty healthy to say the least. The company also declared an interim dividend of 5.75 rupees a share. Let's break down the numbers on a sequential basis. Ashesha joins in with the details. And Ashesha, NMDC beating street expectations.
Well, yes, very strong numbers from NMDC, especially on the profitability front. Higher volumes, higher realizations and lower than expected costs aided numbers for NMDC this time around. Revenues have come in largely in line with what the street was working with and a growth of about 35% on a sequential basis. But margins have expanded a whole lot this quarter. Company has reported margins at 37% versus 29% that the company had reported in the second quarter. As far as other internals are concerned, as I mentioned, higher volume growth aided numbers for the company this time. So volumes rose by about 19% on a sequential basis. Realizations also picked up sequentially on account of price hikes that the company had undertaken during the quarter. In fact, fourth quarter is expected to be even stronger because of continued price hikes in the fourth quarter as well. Yes, company has also declared interim dividend of 5.25 rupees per share. So all in all, very strong set of numbers. Volumes were on the higher side. EBITDA per ton and realizations also inched up higher, which aided numbers for the company.
Okay, let's bring up two stocks in trade for you and let's stack up how HDFC Bank and how SBI have been panning out. Now, HDFC Bank yesterday, as we all know, went back to its 2022 April lows, still not quite there. But yes, it got pretty close to that 1370 odd level in trade. And then, of course, there was the mighty SBI, which moved up the way it did, not just in trade yesterday, but over the last 1 month itself. Kunal, I want to stack up both these charts for you, even though you had a buy call on HDFC Bank last morning itself. But the move in SBI, the weightages, of course, are not the same. It's still a heavyweight and HDFC Bank wins there. But you think SBI could pull up the entire PSU banking pack, have a rub-off on the other banking names and eventually take leadership within the Nifty Bank?
I think what I would believe is that SBI boosts confidence into the sector. So, when you have, for example, if you had an isolated rally where only the mid caps and small caps or the tier 2 banking names are doing well and SBI was maybe languishing at lower levels, and the confidence was not towards building long delivery positions into these stocks, but more towards trading. But when SBI moves, it boosts confidence to the entire sector, the PSU banking lot, and there is more confidence to try and take delivery for these stocks. Look out for more medium to long term, on the upside, because when SBI moves, there's a added degree of confidence that the other stocks sooner or later would also start to participate. I think we've seen that happening as a trickling effect for many of the other, underperforming PSU banking stocks in the last 2-3 months since the time SBI has started to participate above those 600 levels. Now, I would also believe that there could be an added degree of confidence which can come back in the private sector banking names, which has been a miss in the last many weeks or last 2 months of this price correction for the private sector banking lot. And I would believe that if HDFC Bank can probably just hold on to the yesterday's low, not break below the 1350 levels, there could be a very strong degree of confidence which could emerge back again into the private sector banking lot.
Sanjeev, what's your take then when it comes to some of the stocks within the new age tech space? For instance, we've got fresh brokerage notes that are out on Zomato from CLSA. You've also got a PB Fintech that's in the spotlight. How are you looking at the entire cluster, or anything interesting that's caught your eye within some of the recent listings that we've had?
So one difficult call to take, because Paytm has been a part of all portfolios, including ours, and that is diminishing the returns which have come in Zomato and PB Fintech. We think PB Fintech and Zomato are going to be the star performers, notwithstanding what came on insurance yesterday, today at the Bima thing and so on, which will increase the competition. But I think that these are quasi names. Now, in the meantime, you can give this a second look because of the uneasiness of Paytm, the balancing of books. But I think most of the balance in HDFC Bank is done. You've had almost 48,000 crore of HDFC Bank being sold in the last, say, 3 weeks. And I think most of that selling was over ownership, balancing of books. That is all done with. Now, all bad news is in the price. So if you are looking for a bargain, and remember, bad news and prices never will always come together. I think this is the time, because I think the equalization of their mortgage side and the NIMS pressure is now in the back burner. I think NIMS will improve, and so will their credit deposit ratio. So we are, as a house, invested as a disclosure, and we think now HDFC Bank is where you should be putting your money, rather than some of the fintechs, which I think will see a lot of shifting amongst each other till the Paytm issue gets some resolution.
My only pushback with HDFC Bank is that it's not going to be like a 1 quarter classic turnaround. The bank has gone and said that, look, we will hunker down our growth. Liquidity is tight. And when liquidity is tight, for a bank which was supposed to grow at 17-18%, will certainly grow at 14-15%, not even 14-15%, 12 to 13% actually. That will just push back the estimates for FY26 and FY27. So if you're buying HDFC Bank now, you got to be prepared that, okay, next 2-3 quarters, you may not make a lot of money. Time-wise correction, which is on for HDFC Bank, I think the time-wise correction will continue. For me, the turn for HDFC Bank will come, and that really would be the serious turn when Reserve Bank of India will cut rates. Because that's the time liquidity comes back. The problem for HDFC Bank is not book. It is not growth. It is liquidity. Liquidity comes back, then they'll start expanding. Liquidity comes back, then they'll start, growing a lot of things there. So for me, that really is my personal point with HDFC Bank, that the turn, Sanjeev Bhai, will come when RBI will cut rates and liquidity comes back into the system. Because the size of the bank is so large that it is actually more like a macro, event which will move the needle.
Nikunj, and when you have state banks running up 5% every day, then the momentum and the mojo is there. But, the same thing was said for State Bank, closer to 280, 300. And now I'll give you a simple call. The NPA balloon will come after 3 years. At that time, you should be totally out of PSUs and into private banks. I'm not saying that there is any drastic change. But most of this big book lending, credit expansion happens at peaks. And generally, banks which are very, very conservative or which are reducing their book are better placed. I'm not making the case. All I'm saying is that it's not rarely that you get a 2-time price to book on a HDFC Bank and an ICICI and Axis also underperforming. This is the time you must take some chips off the PSUs and put it in these banks. Maybe HDFC doesn't do much for 2 weeks or 2 months or 2 quarters, but its history has shown that it has always under-promised and over-delivered. So it's a relative balance within the market cycle, what you want to do. Play momentum in PSUs or be in value in HDFC Bank.
Fair point. Okay. I'm going to switch gears and just refer to my sheet actually if I can identify something nice. IRDA. What a rally from yesterday's low. This is like one of those darling stocks, Sanjeev Bhasin. Everybody has a view on IRDA. And yesterday's recovery was quite exciting actually.
Correct. IRDA, REC, PFC, GAIL, ONGC, you name the PSU, and that is telling you that how much of pessimism was at its highest in the last 2 years. And yet, as yet, you have just started the rally. I think there is still room on the upside. Most mutual funds and last PMSs who said we'll never touch PSUs are, trying to find a way back. But I would not chase IRIDA because I think 4 times, 5 times price to book is not in my comfort zone, even though the lending space, they get cheaper cost of funds and so on. So like I said, you have to do your stock picking. Either you play the momentum, which is very, very strongly on the PSU side, or you look for select value stocks, which are giving you an opportunity and may be consolidating for some time.
To also talk about a stock ITC, and I've got a lot of tweets. Okay, Nikunj, what's your view on ITC and that entire BAT issue? Where is ITC? Let's look at it. Last 1 month, the change is down 12%. Now, nothing was wrong with the numbers. But specifically, if I come to the BAT issue, yes, BAT is looking at selling their stake or reducing their ownership in ITC, let me put it this way. That really could be a function of what the compulsions of BAT are. And BAT, which is British company, they do have a lot of debt. And in order to reduce the debt, they could be looking at reducing the ownership in ITC by about 3 to 4%. That does not mean that BAT is exiting ITC. That does not mean that the strategic presence will come down. At 25%, the strategic ownership in ITC, at 29 or 25, it's pretty much the same. So I will not read this entire move from BAT to reduce a stake in ITC as something which is going to create a permanent supply for ITC shareholders. Look, supply will come. At these levels, you've seen how many block deals are happening where promoters are selling. QIPs are happening. Market conditions are such that supply will come. But given that ITC right now is one of the cheapest FMCG stock, their businesses are firing full cylinders. Tobacco business has stabilized. Now they are the second largest FMCG company. Margins are in double digit in FMCG. Hotel demerger will happen. And then you top it up with the paper business. There is a huge advantage there. We also spoke to Sanjeev Puri on GBS and he was very, very confident about ITC growing in double digit and margins sustaining going forward. Yes, because where agrarian economy is, what's happening to agrarian exports, that could be a pushback. But on the own BAT issue, I think the supply for a name like ITC is likely to be absorbed. Sanjeev Bhasin, do you agree with me?
Fully agree with you. I mean, the underlying business is doing extremely well. And if you recall, there was this time when there was an overhang of UTIs, that UTI SF selling, which got absorbed by LIC. And actually, LIC was the one which is laughing its way to the bank. So I think, and that was closer to 210 to 20, I think, when the deal took place. I again reiterate, I think at 405, 410, ITC is an extremely attractive stock, given that rural incomes will start to bounce back and the underlying ownership now in this seasonal factors are very, very positive. Plus their hotel business is doing extremely well and all the other parameters are working in sync. So I would definitely like advocate a buy on ITC. And I think the overhang of the BAT stock selling will get easily absorbed by smart investors.
Sanjeev Puri, chairman of ITC, clearly not on the BAT stake sale, but where business is headed.
The aspiration for is certainly that we should be growing much ahead of the rate of the growth of the economy, and anything that is connected with domestic consumption, very much doable, and that's what very much doable growth rates. But there are pieces that are also connected with the global context, so that's something to watch out for. That's in a way, at least for now, it's a dampener. But there is potential as far as the Indian economy is concerned, and that's how we are looking at it. That's how we are architecting our future. We are preparing our portfolio of growth not only for today, tomorrow, and day after. In our parlance, we say that we have a core portfolio which, given the growing consumption in India and the opportunity for penetration, opportunity for per capita consumption is huge. We're saying that we need to, on one hand, scale that up, to use that to address adjacencies, and 3 is also build categories of the future. Some of them start scaling them, some of them incubate them.
All right, that's putting the spotlight on ITC and Sanjeev Puri at GBS. But in the meantime, Naresh, let's get in your thoughts on some of these movers within the infrastructure basket. You've had a HUDCO in the last 1 month, which has gained about 56%. IRB Infra, solid 44%. There's been NBCC as well, which has packed in quite a punch. What are the charts looking like?
So all these names have done really well. HUDCO did not see much of a correction in the last few sessions. It went from 220 to 170, and we are back to almost 200 levels. So out here, the problem is once the stock has gone from 80 to 200, the risk reward is not great. So I would be a little wary on all these names, even NBCC, which went through a sharp move from 70, 80 all the way to 170. So I would focus on names which have not done anything. So something like a KNR Construction, which has gone nowhere for the last 3 years. That looks the most promising name out of the infra pack. And we saw similarly this is what happened with IRB Infra, which had gone nowhere for almost 2 years, as well as for the last 8 years, went up from 30, 35 to almost 70 levels. So now time to focus on names which have not gone anywhere in the infra space. So I like KNR Construction out of the whole basket.
Okay, fair enough. Those are some of the top recommendations within that space. Meantime, just checking in yesterday's trading day within the broader universe as well, lots of stocks that did manage to hold out. And on the top of the list, you had something like a Dilip Buildcon, Kalpataru Projects, BEML gained traction, HPBP as well in the limelight on the upside. And Sanjeev, what are your thoughts when it comes to the OMCs that have had a pretty fiery run, and even the heavyweights within the oil and gas basket owing to the way crude has been moving?
Well, ONGC and oil in India.
I think we're having a bit of an issue with that audio. We'll get right back to Sanjeev and ask him his thoughts on some of those stocks in the spotlight. But in the meantime, let's hear it out then from Sandeep Tandon of Quant Mutual Fund. He continues to remain very constructive on the PSU pack. Let's hear out his rationale.
We have been talking about value as a thesis, and obviously PSU qualify as a value thesis right from September 2021. So it will not be, we were relatively, as compared to somebody is looking at the top, we are very early in identifying that inflection point, and I've been very bullish for last more than 2 years now in this space. So but we remain very constructive. If you look at the larger picture, we are looking for the PSUs, okay? Neither we get too complacent about the move which we happened very recently, nor we get too tense about what happened in last 2 or 3 trading sessions. Growth as a cycle which peaked out in September 2021, which lasted for a decade, more than like started in a rally from August 2012. And if even 20-30% of money shift from growth towards value, there will be big up move which can continue in value stock, and that's a thesis which we are playing, and I think it's a decadal call. It's not a just 1 quarter or 1 year call which we are playing out. And obviously the bigger call is value, not PSU, and within that PSU fit the bill perfectly. So it is apt for us to say and look at the changes which is happening. Okay, look at it from the governance point of view, changes happening in the public sector, the capital allocation which has been a very big concern in the past, that has settling down.
Rahul Shah also joins us. Rahul, good morning. Thank you for joining us. What are you telling your clients? Time to book profits? Time to stay invested? What's the house advice?
Hi, good morning. I think this is not asking clients to book profit, but stay invested. I think we're seeing different themes coming up in the markets, and there's just been sector rotations from one sector to another. So I think stay invested. PSU is the theme which we've been also been, in the last couple of months. We've been also been participating, and we've been also advising clients. So I think stay invested. It looks like that the earnings season also has fared well. So it looks like that markets continue to roll well. Just before a good move, I think is just in a range right now, but I think there could be some more still upside from here.
Nuresh, India Bulls Housing Finance. It's a notoriously volatile stock. Notoriously volatile stock. Upar niche, one day it can give you a swing of 20%. Before I introduce that stock and discuss with you, I'm telling our viewers, एक दिन में 20% ऊपर नीचे हो सकता है. Okay, Nuresh, India Bull Housing Finance breakout yesterday.
So, Indiabulls Housing Finance, if you look at the longer term structure for the last 2 years, it started correcting from 230 levels back in 2021, went down to 90, 100, made two bottoms around those levels. Then the next level was 160, where it had made a top, retested those 160 levels a couple of times, and then went to 230 levels. 230, it has made a 2-3 tops, or almost 4 tops around that area, and then has corrected back. And now it's a special situation with the rights issue, etc. So we need to adjust that going forward. But overall, the longer term structure is suggesting that eventually the stock can break out because we started making a higher base at 160, 170. So the risky bet right now is one can take a preemptive bet here and keep a stop loss below 170. So that would be a deeper stop loss, but eventually there's a good possibility the stock could cross 230 as well.
Okay, Kunal, this is heck of a volatile stock, right? I mean, it's got a reputation of giving you 20% swing on a single day, right?
Yes, Nikunj, but I think the notoriety has fallen down for Indiabulls Housing. The times the stock is out of the FNO. I think December was the last month.
Realize it.
Yeah,
oh,
December,
yeah. Post all those.
December, I think, was the last month, if I'm not wrong. And from January so far, the stock has been less choppy, less volatile. But of course, the trends are missing for Indiabulls Housing. And purely in terms of the charts, 225 to 40, I think, was the previous resistance for the stock, which the stock had hit in the month of November, December. Post that, it's been unable to break past or even come closer to that 200 mark also. Even the last 1 month so far, the stock has actually taken resistance at this 200 level. So we'll have to wait out for a point where the stock breaks past about 200 levels. The only good part is that the volatility has subsided for the stock since it's come out of the FNO, because I think majority of the time the stock used to always been in the FNO ban, and that used to cause the added degree of volatility.
There is a buy on Zomato, nothing new, but this is a buy which is coming from the house of CLSA, and they have a new, not bull case, now they have a new base case target of 227. I think 2021 the stock had plunged to 35 rupees. That time everyone said that it will go to 25. Now, I mean, almost like a zero has got added. Let's actually look at Zomato. 2021, I distinctly remember it had gone to sub 40 rupees. That's 52-week change for you. Wow, I mean, like a bazooka, man. Real bazooka. 2021, there you go. It had come down to sub 40 rupees. Wow. So 40 becoming 150, almost like a 4x from the low. Rahul, do you believe in the CLSA's outlook? They think that after 150% upside in last 1 year, it can give you another 45% in next 2 years. Zomato. Rahul.
I think what happens is, if you look at it, I think the last 2-3 quarters have been very robust for Zomato. If you look at this quarter also, so I think every quarter and quarter, post the numbers have been delivered. I think on the street, most of the houses have been revising their targets upward side. So be as you rightly pointed out, at 40, it was, I think, sub 40 levels, and then I think 60 levels, a lot of guys initiated their coverage and so on and on. And I think if you look at this quarter numbers, you look at delivery business, if you look at Blinkit, both things have done well. So I think 15-20% upside, most of the thesis says that. So I think the CLS is much more bullish on this stock. So I think should be. I think it's a structural for next 3-4 years story for the Zomato. It's not just a one year or so. So I think I'm surely believe that in this story that I think it could still go to 20 years of odd levels.
What would you say, Rahul, is a structural story for next 2 or 3 years?
Sorry?
What else do you think could be a 2 to 3 year structural story?
So I think one is obviously, if you look at, I think, Blinkit, which was leading, which is back into the business, and which we see in this quarter, also the numbers have been very strong. Second, I think, as I mentioned, I think delivery business will keep on going higher and higher. So I think...
what else apart from Zomato could be a structural story for you, not specifically for Zomato? Mine is Zomato. What else could be a 2-3 year structural bet?
So I think obviously one thing which we are looking in the markets is obviously the PSU pack. So I think after a long time, those stocks have and the valuations are just getting re-rated. So I think if I look at it, I think PSU banks, we've been bullish in last quite some time. So I feel that next 2-3 years, I think after a long time, I think if we see most of the large PSU banks or small PSU banks, they have been able to maintain the earnings momentum. be it Canara Bank or be it Bank of Maharashtra or so on, small or any of the small banks like Jammu and Kashmir banks or so on and so on. So if what the management says and if they'll continue to deliver, I think they'll still get re-rated. So that's what is happening in last couple of months. We are seeing that privates are not performing and PSUs, because of the beats and most of the thing, they are just getting it. So I think if they continue to deliver, I think next 2-3 years, I think PSU as a theme, but I think the banks could do much better from here, and I think could be a good driver for the investors.
Rahul, morning. Wonder what you're making of this source-based news from ET Now that Vedanta is in talks, the promoters with GQG for a potential stake sale. How do you believe this would weave into the story?
So I think if you look at, let's look at one simple thing. Wherever the GQG has put their money, I think the most of the stocks have fared very well. Obviously, the Mr. Market has also done well, but I think most of the stocks, wherever they put money, be it Adani or be it JSW or so on and on, I think they have done well. So I think obviously the question about the Vedantas, I think what happens if they get into it. So I think obviously the stocks in a near term should do well. Rest obviously the businesses and overall will take care of it, but I think near term I think the stock can do well because of this story.
Fair enough. You know, we were actually debating earlier this morning when it comes to some of the heavyweights within the banking space. And yes, while SBI's weightage stands at a meager 10% as compared to HDFC Bank's weightage, given the spate of underperformance from HDFC, the fact that a lot of fundamentals have been stacking up in favor of SBI, do you think that SBI being an outperformer really drives confidence it could do perhaps what HDFC Bank couldn't?
So I think let's not compare them together. But what I feel is that SBI, yes, I think as I mentioned also that I think all PSU banks have started getting their things back into the momentum. So I think if I look at the earnings visibility, second, whatever the management has said, they have been delivering into it. Thirdly, I think most important, I think the credit cost for the SBI is going to remain strong, remain in what they have been management has guided for. So I think this quarter, obviously the NIMs were a little bit lower, but I think what the management says that going forward it will be better. So I think entire all pack, I think SBI obviously with the subsidiary plus the core book, if I look at it, still I think FY26, if I look at it, it's at 1.2 times book. So I think still upside from here. Secondly, vis-a-vis if I have to compare with HDFC Bank, so I think so it's no apple to apple, but I think there's a lot of value in HDFC Bank as well. So I feel that if you're catching an alpha for near term, short term, 2-3 months, 6 months, then yes, I think State Bank can do well. But if you have 1-2 year story or maybe beyond that, then I think HDFC Bank could be there. I think again the valuations are very compelling for the HDFC Bank core business. If I look at it, 12 times earning plus the subsidiary valuation at this 1400 level, sub levels. So I think risk versus reward is quite favorable for HDFC Bank. I think near term I have no clue, but I think if I talk about a year and so, I think the investor definitely will be rewarded in HDFC Bank from current levels.
65 points higher for SGX Nifty. So Nuresh, 22,000 could really be today's sprint. What happens then? I mean, a new high, sustainability. Do you see that scenario getting played out for next couple of days?
So today would be difficult testing the 22,100 mark as of now, but that is where the change of trend happens. And the problem is the Nifty weights. So say if you look at it, we've not made a new high on the Nifty about 22,500. But if you look at a Nifty 500, the last time we went to 22,100, it made a new high. Nifty 50 equal weight made a new high. So if you remove out HDFC Bank, we've already hit a new high in most of the names. So out of, say, if you were to look at Nifty X of HDFC Bank, we've hit a new high and we are testing that. So if we see HDFC Bank supporting, it becomes easier for the 22,100 mark to cross. So overall, the bias remains positive. Globally also, we are hitting new all-time highs, whether it is US markets or Nikkei, etc. So the bias is we can eventually break 22,100 over the next, maybe not if couple of sessions, maybe over the next 2-3 weeks.
Screen yesterday, if I look at it, intraday recoveries, let's look at it. Nalco, IRFC, big comeback in IRDA, big comeback in Indian Oil Corporation, that big block deal in BPCL. Actually, yeah, let's look at that block deal in BPCL and look at the names in that block deal. It's got names like eSpring. So who says that foreign institutional investors don't buy PSUs? I mean, that's all bogey. We'll put out some names of that big block deal in BPCL. If my memory serves me right, I think East Spring. Earlier, our friend Krishna Kumar was there. I mean, he's not managing the fund now, but it's a fund which has got a very strong, formidable presence in India, both in terms of direct participation and also, managing money for clients. But BPCL, HPCL, they've seen a formidable comeback. Rahul, what has changed for BPCL, HPCL? Normally these stocks, they tend to underperform in the run-up to the election. For the first time, they are outperforming in the run-up to the election. Rahul? Oops.
No,
Back?
Yeah.
Is he back?
Blink.
Yeah. Oops. It's, this sector is slippery. So when you ask a question also, things get slippery. Okay, Rahul. HPCL, BPCL.
So I think, and you mentioned, I think so last 2-3 quarters, if I look at it, the numbers have been great. So if I look at last year versus this year, last year 2 quarters losses and then recovery in last 2 quarters. And then again this year, last 2 quarters back to back has been good. So I think this quarter numbers were slightly below what we were estimating or Street was estimating. So I think obviously one thing is that I think the valuation is the only one which I feel that the markets are chasing, and obviously the GRMs have moved up for this company. So I think obviously the most of the part has been already done in this company. So I think again, risk from here, risk versus reward, I don't think so. It's much more favorable from here. Maybe in a correction or a dip, one should look at it, both the companies.
That's the take coming in on BPCL. Well, it's not just BPCL. Look at the moves coming in on ONGC, and not just yesterday's price action, that of a 3.5% uptick, but the last 1 month or 15 days also how they've panned out. Kunal, you see continual upside for the OMC pack, for ONGC?
Well, yes, definitely. In fact, it's a different trend altogether for these stocks. We've not seen historically these stocks getting into a stable uptrend or a high beta, high momentum uptrend for themselves. The trend's been far more stable for these stocks. There's lesser degree of extreme volatility for these names. You may have intermittent phases of these stocks pausing after a strong uptrend, but then I think the trends are far more stable. The recovery is far more stronger for these stocks. I think IOC, for example, had fallen from 195.96 to I think closer to 170, 175 levels, and in a matter of couple of days, the stock is back again about that 180 mark. So that itself indicates that the corrections are very shallow, and they don't last too long for these stocks. That's a very good sign for trends emerging into these names. So I believe that these stocks have amply corrected at 10-15% from their previous swing highs. Should be good enough zone to start entering into these names if someone is missed out.
Okay, those are the pre-open rates coming your way. Let's see whether there is a follow-through price action coming in on NALCO or not, considering that was the big mover yesterday. Today, the dhamaka earning clearly is going to be NMDC. So let's see what that stock price as well is up to. While for the indexes, about 0.5% uptick is what the Nifty is indicating, rather flat for the Sensex. We'll wait for those rates to settle down. But there will be a lot of earnings reactions. There's Sun TV, Capacity Infra, Confidence Petro, Gateway District Parks, there's GSPL, Axis Cades Technology, so a lot of other numbers which are in focus, and equal count when it comes to the weak set also. Look at Indiabulls Housing. Their AUMs have fallen down over 4%. Disbursements have seen a slip of about 21.5% nearly. So that's going to be the other stock which is going to be in focus. EBITDA though has seen an uptick of 27% on a year-on-year basis. Let's see what ABFRL is up to and what the pre-open rates for this one are indicating. For Crompton Consumer as well, the numbers are, that's quite a bit of gap down actually for AB Fashion. But again, these are just the pre-open rates. We'll see what the stock settles in at. But considering it's an F&O stock, considering there was a high concentration of H&I portfolios as well into AB Fashion, maybe the price reaction, and especially in light of what Trent has done, maybe the stock price reaction today after the earnings could be exaggerated on ABFRL. There's also Glenmark. The EBITDA has turned loss versus EBITDA positive. The India business has seen quite a sharp decline. So look out for Glenmark Pharma as well. That's the other stock which is going to be in focus. Kunal, let's get some mid-cap strategies from you on that note.
So I'm going for a contra buy on DCB Bank, a stock which has been beaten down over the last 5 weeks from 160 to I think 120, 125. The stock made a low. So expecting a very strong uptrend for the stock over the near term. 150 as a target. So expecting at least a 10% up move further from yesterday's closing for the stock, and stop loss could be kept at 125.
Right. Naresh, what about your stock ideas?
So it's the same idea, buy on DCB Bank. A similar logic, the stock has corrected from 160 levels. The last time it broke out about 125, went to 160, 65. So the risk reward is interesting. And we saw a good bounce yesterday. So expecting a move back to 155 levels, stop loss at 127.
Okay, now Vedanta is in news, and for details of what GQG is likely to do here, I mean, GQG is now really, enjoying this reputation that whatever they touch turns into gold, and they are the most sought after name because the kind of wealth they've created for their investors when they bought into Adani group of stocks, I think is legendary. So GQG right now is like a, it's like this Midas touch that whatever they touch in the stock market, that stock will get re-rated. And I just got details on what are they likely to be eyeing or where are they looking at investing next. Ajay.
Well, that's correct. GQG, the maverick investor, is in conversation with the Vedanta group for a potential, stake. We understand that Vedanta has been at the parent level facing some, stress on the debt levels, which they have anywhere between $3.5 to $4 billion. We understand in the last 1.5, 2 months, they have, repriced, much of their debt and restructured it, but still debt exists. We understand that the conversations with GQG have happened multiple times in the last 2 months, and then the final one has happened most recently, and this will culminate into a potential stake sale of almost $1 billion from the parent side of Vedanta. And the money raised will be utilized to cut the debt quite meaningfully. In fact, the large messaging to the market would be that the management is going ahead to any length in order to cut their debt levels. We reached out to the management around it. They did not respond. In fact, they said that they don't respond to market speculation. But we understand that the deals are likely to happen very shortly.
Let's also get you some more buzz. That's not it. That Vedanta is on the block, not on the block. It seems that GQG is eyeing a block of Vedanta. But some more cover, and Sterling and Wilson and renewable energies are likely to bag a large order, it seems. Sharad is here with all the buzz on that.
Well, the cover on the street is for Sterling and Wilson renewable energy, and the buzz is that important international order on the large size is expected for the company, and importantly the channel checks suggest that the company has started bidding aggressively for international orders as well. Now recently the company did win its first international order in 3 years, and this was a large solar order coming in for the Spain area, which is the European area, and importantly this order was worth 112 million euros. So important development coming in when it comes to this international business. And also if you look at it, the consolidated order book that stands at roughly 8,800 crore rupees. Now of course the street feels like the company is on its debt reduction path, and importantly the repayment is on track, as well as that accelerated QIP also came in, which is helping the financials and the balance sheet of the company. Importantly, there were channel checks also which we did over here. The analysts are stating that the domestic module prices, they are expected to be subdued over the next 3 to 6 odd months, and they're actually falling in line with the international prices, which have already been on a decline ranging between 40 to 50% from their recent highs. So important development coming up for Sterling and Wilson renewable energy when it comes to international orders.
Well, SBI, that's surely been seeing an excellent rally, as was the case yesterday as well. Will this continue, and how does it stack up with the performance of HDFC Bank, which has the highest weightage amongst the banking names within the index? Here's Nikunj's take on the same.
So in terms of the impact what SBI would have versus what HDFC Bank would have, the impact I think would be much less. But I guess SBI has done something special in the last couple of days, and that is what I would like to point out. Post numbers, there were a lot of naysayers who said, okay, there is a general challenge in the environment, liquidity is crunched and NIMs are likely to be under pressure. SBI has really surprised everyone and delighted everyone. I think two factors are at play here. One, post HDFC Bank numbers, HDFC Bank, which in a sense had become the most concentrated contra bet, that in a sense has gone on the back burner because markets did not like what HDFC Bank had indicated. But markets are aware of the fact that the Indian banking sector, I think, is in a good shape. And within that, I think the switch is on. So if you compare HDFC Bank versus SBI, I'm purely looking at price action here. The price action, I think, is just giving an indication that how money is moving out of HDFC Bank and how money is moving into State Bank of India. B, I guess State Bank of India is still very cheap. Valuations are not very expensive. They are at the turn where size is becoming their advantage. The liability franchise is still intact. And while SBI may not be doing the kind of heavy lifting what HDFC Bank can do purely because of the weightage, but SBI coming back, that in a sense becomes the real pivot for a lot of PSU banks which otherwise have been in a good groove. I'm going to say the same line which I said 2 years ago. Who says elephants cannot dance? Well, this one is an elephant and this one has decided to do a tango.
All right, that's the editor's take, but let's get a move on and also tell you about the index calls. And here's what it is that our chartists are advising you do with your position on the Nifty and on the Nifty Bank Index. So that's just going to come up for you. Well, it's a buy strategy from both our chartists, from Kunal and Naresh believes that it's a buy on dips. This after yesterday's pullback that we witnessed. Remember, the Nifty Bank Index as well over the past many days has been seeing quite a bit of a recovery. So it's a buy on dips from Naresh and a buy call on the Nifty Bank from Kunal.
Okay, let's just look at the setup here. ABFRL, I mean, look at Trent and look at ABFRL. I'm just going to put a plot here. ABFRL, Birla Group company. Trent, Tata Group company. ABFRL is growing by acquiring. Trent is growing organically. Trent is at 3931. Now let's look at 2020. And 2020 map ABFRL and Trent. Then we can look at 2021 also. Whatever comes to mind, just plot it up. That's the intraday graph today of ABFRL. The stock's going to face some music because they've not delivered. And this is one stock where everybody is hoping that turnaround will happen. But the magical turnaround has not happened because the capital allocation, I think, is still something which really needs to be checked on. Let's plot that, please. Two fashion companies, one Birla, one Tata. But you will actually see a absolute large difference. That's ABFRL for you. 118 has become 245. From the throes of pandemic, guys, from the throes of pandemic when the world was shut down, 100 has become 240. Trent has become from 550. It's not an error, huh? It is not an error. 100 has become 240. 500 has become 4,000.
Was
It's
it
not an error.
CLSC or I don't know who came up with a report where the header was, "Dear Trent, we're so sorry." We were
Yeah. I don't think it was CLSA, it was Jeffries,
One
but
of
it just
the
happened.
brokerages.
Yeah.
Because they thought, it's reached the top around those 3,500 levels and the valuations have peaked out and it's not going to move up anymore. But look where it is.
There's one stock, Saurabh Mukherjee's got it right.
Trent.
Of late, he's been, he's actually been coming on air and talking about that, Trent is something where I'm disregarding the chatter which is in the market in terms of valuation. The guy's really got it right in Milan Karmarkar. I think he's been holding on it 2 years now. Decades actually now. But my point is, you have to realize that what has changed. I mean, Trent does not have debt. ABFRL has debt. Trent is growing without acquiring. ABFRL is growing only after acquiring. They've really spread themselves too thin from owning some designer, stakes in some designer boutique stores versus their expansion, which is pretty much happening across the board in terms of both online and offline. Trent has kept it simple. Incubate a business, grow, and then it just keeps on growing. But that's the way it is, guys. I mean, you have a good business which grows, the markets will reward you. You don't grow, you don't deliver, doesn't matter what your lineage is, markets are going to punish you. They've got debt and they've not been able to turn it around, to keep it very, very simple. But the space which I want to go back with you, Nuresh, is oil marketing companies. Post-December, I would say post-November, they've started what really could be called as an independent bull run. Doesn't matter where crude is, what's happening to the election cycle, what's happening to PSU stocks, HPCL, BPCL and IOC, they've charted their own course.
So they still look interesting because if we go back a little, the last time BPCL topped out was in 2017 to 2019 around 550 level. So that's the price point it did not cross. So the stock was always supposed to be the best idea in terms of disinvestment, etc. But the stock did not perform. Finally, we've seen that performance start from 400, 450. So when we see such multi-year breakouts, it can continue to surprise. So even now, one wants to wait for a dip here to again participate. But if one has it, continue to hold on. Out here, same thing has happened with the whole OMC SPAC as well as the ONGC has moved together. So generally, we would see both these names do not move together, but we've seen upstream, downstream, both have done well. So out here, it's a trend which could continue and which momentum could beget momentum. So out here, I'll wait for some bit of a consolidation or a dip to again participate.
Other stocks in news, NMDC, big numbers. M&M numbers came yesterday, brokerage reaction today. You got Yatra where numbers were decent. You got Zomato where a big upgrade has come. PB Fintech, a lot of brokerages have taken their take as to the new platform which would be incubated in terms of the insurance space. So these are some of the stocks in news. Yatra, Narayana Hyderale. Let's look at the prices also. GSPL, Vedanta and NMDC. 5 stocks which in a sense are the ones where you need to look at it. I mean, of course, it's a no-brainer to see NMDC, which would be strong. Vedanta, let's see the GQG impact. I mean, Rajiv Jain is now known as the man with the Midas touch. And then GSPL, where PAT has actually declined 51% sequentially. Glenmark Pharma numbers were also not that strong, but I think markets will give it a time. And in the pre-open session, Paytm is down another 4.5%. So that's the market for you in terms of where the setup is, and that's the market for you where in terms of the right now the stack is. So NMDC is up 5% and 20 seconds to go. We did see a recovery, and that was independent of what was happening to the world yesterday. Let's see if you are able to really build on that, and let's see if you are able to really take it closer to 21,200, which is the all-time high. First rates, and the first rates any second now will start coming up on the wall. I'll let the screen do all the talking. First, let's take a look at the markets, and I'm just going to look at the wall here just to establish the rates here. First, it's Sensex, the Nifty. Just bear with me. Our graphics are slightly lazy today. Bit of a reboot. Happens every time. Doesn't matter. The breadth is phenomenal. The breadth I think is phenomenal. 1369. 1526. The market breadth I think is looking solid, and market breadth is looking very decent. I just want to address the newsmakers here. Let's look at NMDC, Paytm, Zomato. These are stocks which are important. NMDC stock in news 3%. Paytm down another 4%. That takes it almost to 320, 325 now. Zomato, it's on its own league now, 158 rupees now. And if one really looks at what is happening to the market in terms of the setup I think is very favorable in favor of advances versus declining stocks.
Okay, bunch of other names which are going to be in focus. NMDC, of course, has gapped up about a 5.5% uptick is what that stock is seeing. Reliance not doing a whole lot. Let's see what HDFC Bank and SBI are up to. Just a meager green coming in for SBI. 744 is where that stock is right now in trade. The Nifty Bank, by the way, that also is very, very muted. Vedanta, Ajay just highlighted that perhaps GQG is an interested party and is looking at, a buy there. But Vedanta has started off well in the red as we speak right now. Lot of earnings reactions. So Muthoot Finance has started off well in the positive, 4.25% of an uptick coming in there. The gold AUMs have come in higher by about almost 29%. There's Capacity Infra, Sun TV, Confidence Petro, Gateway District Parks, all a list of positive numbers as we speak right now. There's a sizable block deal in Vedanta. 2.25% equity has changed hands. Perhaps we'll get in, Ajay, If he's picking up any buzz, whether it's GQG already, Vedanta 274 is where that stock is right now. In the meantime, other newsmakers, Glenmark came out with a weak set of numbers. There's Aditya Birla Fashion, wherein there's a net loss versus a profit, though EBITDA has seen an uptick of about 27%, so that stock also will come up for you on your screens. There's Gland Pharma, Indiabulls Housing, Alembic, Narayana Healthcare, PTC India, and mind you, these are all a list of weak set of numbers. For the index as well, the bias is fairly muted. While we're in the positive, we're hovering around the 21,900 mark. But let's see what direction the market takes eventually from here. I want to also revisit what BPCL, ONGC, etc. are up to. The kind of surge that these stocks have been seeing off late, and clearly that momentum continues. BPCL, ONGC, both in the green as we speak right now. And yes, Bank also has seen nearly about 1.5% of a block deal coming its way.